Muy buenas tardes, good afternoon. Welcome to the Woodrow Wilson Center. Bienvenidos al Centro Woodrow Wilson. I'm Andrew Seeley. I'm Executive Vice President here at the Woodrow Wilson Center. We have several distinguished guests with us here today, including our panelists, Ivan Zarek, Vice Minister of the Economy, Ada Varela de Chinchilla, Vice Minister of Finance, Ricardo Fernandez, Bank Superintendent, and our commentator, Chip Ponce, a former Treasury Department official and Senior Advisor for the Center on Sanctions and Illicit Finance at the Foundation for the Defense of Democracy. And in the audience, I believe, either with us or joining us, well, first and foremost, we have the Ambassador of Panama, who's a good friend of the Wilson Center, Ambassador Manuel Gonzalez Revilla. Ambassador, good to have you here with us again. Always a pleasure to work with you. And I believe we're being joined by Arturo Valenzuela, former Assistant Secretary for Western Hemisphere. Arturo, a good friend of the Center as well. Carmen Lomelin, former U.S. Ambassador to the OAS, and Ana Maria Rodriguez, from Manager of Institutions for Development at the IDB. This is clearly a timely topic, but let me say that Eric Olson, my colleague, Cindy Arnson, Director of the Latin American Program, Eric, Deputy Director, began planning this program with our colleagues from Panama before the Panama Papers came out. This is a topic of great importance. The government of Panama has been doing a lot of work on transparency in finances and financial transparency in practices, and we're anxious to talk about it. And obviously the Panama Papers have brought attention to this subject in new ways. It is clearly a question of Panama, but it's also a question of the international community. The larger questions involved in the Panama Papers have to do with how the international community deals with offshore banking to ensure that those seeking privacy for legitimate regions are not thrown into those who seek to avoid the law, to avoid taxes, and continue criminal activity. I have a feeling this will be a very interesting, enlightening hour that we spend together. And let me turn this over to Eric Olson, the Deputy Director of the Latin American Program and an expert on the region. Eric.
Thank you very much. Andrew Seeley, the Vice President of the Wilson Center, and we always consider ourselves very privileged to have, as our Executive Vice President, somebody with such a long track record of work in Latin America and Mexico. So thank you, Andrew, for your interest and support for these programs. As Andrew said, obviously this is a very timely panel discussion. When I started talking about this with the Panamanian embassy a few weeks ago, they asked me how many people they thought would come to an event such as this, and I said, well, maybe 25 or 30. But I guess something happened on the way to this event that has piqued everybody's interest. So we are incredibly grateful to have such a high-level, well-informed panel of Panamanian authorities to help us understand this very complex and frankly quite unknown issue for many of us in the region and around the world. It's a very complicated and difficult one to wrap our heads around. So I am not going to take up a lot of time. I'm going to introduce our panelists and invite each one of them to speak. And then at the end, we'll have some time for questions and answers. So if you bear with me, I'm going to give some brief introductions. There are longer bios at the back table that you can follow, but let me just begin with that. We're going to hear first from Mr. Ivan Zarek, who's Panama's Vice Minister of Economy. Before becoming Vice Minister, Mr. Zarek served on the campaign team of then candidate Juan Carlos Varela, who's now the President of Panama, advising him on economic policy issues and assisting in the development of his political platform. Prior to his role in public service, he served or worked for many years in the banking sector. Most recently, he was the founding partner of Prival Bank S.A., a general license bank in Panama. Thank you for joining us. Minister, Vice Minister.
Thank you.
He will provide a general introduction to the Panamanian economy as well as discuss the steps taken by the Varela administration to improve transparency, combat money laundering, and tax evasion. In addition, he'll talk a bit about the government's response to the Panama Papers. Let me also introduce Vice Minister Varela de Chinchilla, Panama's Vice Minister for Finance. She has over 20 years of private sector experience in the hydrocarbons industry, working for Esso Standard Oil, SA in Panama, an affiliate of ExxonMobil Corporation. Among other responsibilities, she also served as president of sales and supply for ExxonMobil and Esso Standard Oil companies. She will speak to us, giving us a little more in-depth look at the steps undertaken by the Panamanian government to be removed from the Financial Action Task Force's gray list, which has been a major accomplishment on the part of the government of Panama recently. Next, we're going to hear from the Panama Superintendent of Banks, Mr. Ricardo Fernandez. He has over 30 years of experience in banking, including marketing, corporate credit, and banking products management, as well as in the management of banking relations with both corporate clients and financial institutions. He also worked for Chase Manhattan Bank for 5 years, where he was responsible for trade and shipping. Finally, we've invited to be a kind of an objective, independent commentator, Mr. Chip Ponce, to provide his view of what's going on in Panama and the broader global context for this. Mr. Ponce is a senior advisor at the Center on Sanctions and Illicit Finance at the Foundation for Defense of Democracies, and he is a founding partner of the Financial Integrity Network. Previously, he served as the interim head of financial crimes compliance for Mexico and Latin America, and one of the region's largest banks. And from 2002 to 2013, he served as the inaugural director of the Office of Strategic Policy for Terrorist Financing and Financial Crimes, and a senior advisor at the U.S. Department of Treasury. So a vast amount of experience in these issues. So we're delighted to welcome our panelists. We're delighted to welcome all of you to our discussion today. Let's start off with Mr. Zarate, Vice Minister Zarate. Sarak, sorry.
Yes. Thank you, Eric. I would like to start by thanking the Wilson Center for their gracious offer to host this timely event. Andrew, we greatly appreciate your kind words and welcome. And Chip, thank you as well for taking the time to join today for this important discussion. We are very pleased to be with you today. Though, to be honest, when we first started discussing this event over a month ago, our plans were slightly more low-key. That being said, I cannot think of a better place to be right now. It is with great pleasure that I am here today at the Wilson Center representing the Republic of Panama. It is actually very appropriate that I am here at a center named after former President Woodrow Wilson. Many of you probably know this, but President Wilson was President of the United States in 1913 when the Panama Canal was originally inaugurated. Before the age of the internet and advanced telecommunications, President Wilson was able to remotely inaugurate the canal via a telegraph that signaled the detonation of the dam that was holding back the waters from the Gatun Lake. In 1912, President Wilson also persuaded Congress to repeal the Panama Canal Act, under which many American ships were exempt from paying the required toll for passage through the canal. It was not until 1979, however, when President Jimmy Carter signed with Panama the Torrijos-Carter Treaty, under which the Panama Canal would be transferred to Panama by the end of 1999. These are just a couple of the many anecdotes that represent the long-standing relationship between the United States and Panama. Now, more than 100 years after the inauguration of the canal, I am here at the Wilson Center to talk about Panama, our economy, and the recent news regarding certain issues in global financial system where Panama has been mentioned. First, I would like to talk about Panama's economy in general terms, as I believe it is important for the sake of context. Panama is a country of around 4 million people with a per capita GDP of around $13,000. This makes Panama one of the most economically prosperous and stable countries in Latin America. Panama has been, for the past 10 years, one of the fastest growing economies in Latin America, with an average real GDP growth of 7.6% from year 2005 to year 2015. According to the World Economic Forum, Panama has the second most competitive economy in Latin America and the most competitive economy in Central America. We have been successfully administering the Panama Canal, one of the world's major hubs for global commerce, since it was reverted to Panama by the United States on December 30th, 1999. In 1999, just to give you a brief glimpse of the efficacy under which the Panama Canal is being administered, when the Panama Canal was reverted to Panama, it generated a bit less than $500 million in revenue. By year 2015, revenues exceeded 2,500, 5 times the revenue of year 1999. This reflects a 12% year-over-year annual growth rate. Unlike some other countries in the region, Panama is not dependent on commodities. As a matter of fact, we're a net commodity importer. 2/3 of our economy is based on services, and no economic sector represents more than 20% of the economy. I'll give you a brief introduction of some of the main economic sectors. Trade and commerce represents 20%, construction 16%, logistics and communications 13%, banking and financial services 7%, tourism 4%. On the flip side, legal services related to incorporations, an industry that is receiving much global attention right now, actually represents less than 1% of GDP. In terms of connectivity, Panama is home to the first metro system in Central America, which we are currently expanding. Our local airline, Copa Airlines, offers direct access to more than 70 destinations in 30 countries across the region. Our airport moves more than 8 million yearly passengers through more than 295 flights daily. We're one of only 3 places in the world that moves more passengers than people living in the country. Our modern port system is complemented by the Trans-Isthmian Railway, which connects the Atlantic and the Pacific Oceans, as well as an oil pipeline that also goes from the Atlantic to the Pacific. As of 2010, our sovereign debt has been rated as an investment grade by all 3 major rating agencies. We currently hold a BBB rating with stable outlook. As you can infer from these statements, Panama is a real and diversified economy that in recent years has been able to attract foreign direct investment from more than 100 multinational companies from all over the world, including United States, Japan, Europe, and Latin America. I definitely would have liked to dedicate more time to talk about the Panamanian economy and our accomplishments and our perspectives. However, I have to acknowledge the elephant in the room: the recent publication of documents that have unfairly been used to tarnish the name of our beloved country. Let me say first and foremost that Panama does not tolerate illegal activities in any form. We are aggressively pursuing any allegations of impropriety in accordance to the rule of law. And we have reiterated our full commitment to cooperating with the international community in their investigations and to continuing to make significant reforms to enhance the strength and transparency of our financial and legal framework. That said, these so-called Panama Papers are not in fact about Panama, or even about Panamanian companies. Consider some of the facts. Number 1, the news revolves around one Panamanian firm that has operations in 30 different cities around the world. Number 2, according to the International Consortium of Investigative Journalists, more than 75% of the companies mentioned in the documents were established in foreign jurisdictions outside of Panama. 3, these documents mention acts that were committed as far back as 40 years ago, in a world that was very different at the time and that had very different practices and procedures. Contrary to media reports, Panama does not make special allowances for offshore structures. The association of Panama with offshore activities comes from the fact that we only tax income derived from within Panama and not foreign income. This rule, based on laws in New York and Delaware, originated in 1927 and are common practice today. And as I noted already, less than 1% of our GDP is from legal services related to incorporations. These documents shed light not on a Panamanian problem, but rather on a global phenomenon that is affecting almost all countries. This is not a cop-out, as no doubt there are further steps that Panama has committed to take to strengthen transparency, but rather a reflection of the reality of what's happening today around the world. Let's use the following hypothetical example to further clarify this point. A Panamanian firm opens an offshore company in a UK territory for a German resident who in turn uses the company to open a bank account in a French bank headquartered in Asia. As you can infer, none of these individual actions is illegal. There were 4 different compliance officers from different jurisdictions that found no wrongdoing. However, each one of them was looking just at their own piece of the puzzle, and none of them were looking at the whole operation. Given this vulnerability, some people have been quite proficient in rigging the system to hide their wealth and skirt the rules that everyone must play by. Let me first make reference to some of our past vulnerabilities and the steps that we have taken to address them. Some of our recent major accomplishments regarding transparency are the following. Since 2009, Panama has been negotiated agreements that include provisions for the exchange of tax information with relevant partners. Up until now, we have signed more than 30 double taxation agreements. In 2011 and 2015, Know Your Client legislation was enhanced to comply with international standards. Not only financial and legal services providers are required to follow due diligence procedures, but more than 20 other non-financial services activities are subject to KYC rules and regulations and have the obligation to report suspicious transactions. In September 2015, at the 70th General Assembly of the United Nations, President Varela announced the commitment of Panama to the automatic exchange of information. In October 2015, Panama advanced to phase 2 of the peer review by the OECD's Global Forum. In February 2016, just 2 months ago, Financial Action Task Force on Money Laundering, the Financial Action Task Force on Money Laundering performed a review of the established action plan for Panama. The Financial Action Task Force cited Panama's significant progress in combating money laundering, and they removed us from their gray list. This was just 2 months ago. By the end of this month, before the end of April, Panama will be signing an IGA, or Intergovernmental Agreement, with the United States to implement the Foreign Account Tax Compliance Act, or FATCA. And lastly, as Panama has reiterated on multiple occasions, we are fully and immediately committed to the automatic exchange of information on a bilateral basis consistent with the common reporting standards set forth by the OECD. Panama has shown great resolve on the issue of combating money laundering and terrorist financing, but there is more work to be done. Truth be told, Panama is ahead of many developed countries in terms of financial transparency, according to the Tax Justice Network. But even with this recent progress, more work needs to be done to eliminate the problem of tax evasion and money laundering, not only in Panama, but around the world. Have no doubt about it. Panama is committed to transparency and the building of a stronger, cleaner, and more just world. However, in order to implement these measures, we must resist the temptation to go on a historical witch hunt that ignores the many significant reforms implemented in recent years. We must and we will focus on ways to solve the problem going forward. The global problem of tax evasion and money laundering is a threat to international stability and development, which risks impairing cooperations between the countries of the free world if not handled correctly. It is imperative that nations work together towards collaborative solutions that address the true vulnerabilities that are hindering the global financial system. By many estimates, trillions of dollars are likely being illegally hidden through complicated schemes around the world, resulting in as much as $200 billion lost in tax revenue each year. This includes $100 billion in lost funds annually for developing countries, which could be used for important investments in infrastructure, health, and education. Panama is committed to being a good global citizen, and as such, we have taken and will continue to take the necessary steps to meet these challenges. Furthermore, it is our belief that the only effective way to tackle this problem is through collective and coordinated action by all jurisdictions. Panama stands ready to lead the way on these reforms. We must take important steps to safeguard not only our interests but those of the international community. Therefore, we will not only continue to work domestically on financial and legal transparency, but we shall pursue more comprehensive solutions to benefit the rest of the world. To this end, President Varela has announced that Panama will create an independent Blue Ribbon Committee of international experts to evaluate our internal processes, determine best practices, and propose the adoption of specific measures which we will share with other countries in order to strengthen global financial and legal transparency. Nobel laureate economist Joseph Stiglitz and former chairman of the OECD Group on Bribery International Business Transactions, Mark Peath, have both agreed to join this task force. We expect the findings of this committee in approximately 6 months. Throughout history, our country has overcome significant challenges, such as administering the global and strategic asset that is the Panama Canal. Despite international skepticism, 16 years later, we have not only successfully reaffirmed our position as a global and transparent hub for trade and commerce, but in a few months, Panama will be proud to complete what is currently one of the largest infrastructure projects in the world, the much anticipated expansion of the Panama Canal. This expansion will signal a new era of opportunity for increased win-win trade and commerce with the US, the Americas, and the world. As we did back in 1999 with the canal, we stand ready and willing to take on this next challenge. Make no mistake, Panama will not falter under adversity. We will show with resolve our commitment to cooperate with the worldwide community, not as a result of threats or sanctions, but because we believe it is the right thing to do. Now, I will hand it over to our Vice Minister of Finance, who will talk about our most recent developments and the measures that Panama has adopted in compliance with the Financial Action Task Force recommendations. Following the Vice Minister's intervention, our Bank Superintendent will talk about the Panamanian banking system from the perspective of the regulator. Thank you very much.
Okay. Good afternoon, ladies and gentlemen. Thanks to the Wilson Center and specifically to Eric Chip and to John for having Panama government to have this opportunity to explain a little bit about the actions that we have taken recently. I would like to provide for you today a more detailed look at the concrete steps Panama has taken to improve the transparency of our financial system and enhance regulation in accordance to international standards and norms. The reforms I am going to discuss have all been made under the current Varela administration, which has only been in power for 21 months. In that relatively short period of time, this reform has been recognized by the international community as placing into effect a robust regime committed to anti-money laundering and combating financial terrorism, and which led to Panama removal from the Financial Actions Task Force gray list on February 2016. This removal happened in record time. Our upgrading and strengthened legal reforms are currently in effect. Beyond the recent legislation that I will be talking about, I believe it will be even more important to share with you how we are enforcing those laws and the impact they are having today. Before addressing the reforms already made, let me briefly explain our model for the prevention of money laundering and terrorist financing. In the graph you can see on the prevention side, we first start with the regulators and supervision of the reporting industries that are vulnerable to abuse. This, of course, includes banks and other financial entities. However, an important point I would like to make is that we have also implemented strong regulations that covers key non-financial entities and professionals such as lawyers and accountants. I will discuss this regulation in more detail shortly, but I would like to point out that many of these steps go above and beyond the requirements of most other countries. The role of the supervisors and regulators is twofold. They must both create and enforce the regulations that govern each sector. One of their key responsibilities is to verify through spot checks that the entities are complying with their due diligence requirements. The supervised companies in each industry must work directly with the financial intelligence unit to report on any unusual or irregular activity of their customers. The financial intelligence unit is the center of our supervisory and regulatory regime. It receives information from the customers, analyze it, and report any potential criminal cases to prosecutors. In Panama, we have a strict separation of powers and rule of law. And so enforcement is the responsibility of the Attorney General's office and the judicial branch. It is an independent and not politicized. Now let me discuss in more detail the specific reforms that has been made in the 6 main areas to comply with international transparency standards. The first reform is to expand the criminalization of money laundering to include penalizing the financing of terrorism among other illegal activities. As part of this reform, the Attorney General's office created an independent prosecutor's office specializing in money laundering and terrorist financial crimes, and another prosecutor's office specializing in organized crime. We are already seeing one of the new prosecutor's offices, as just this week, they raided the headquarters of the law firm at the center of the so-called Panama Papers scandal. This shows our system is working as intended. The second reform is the freezing of terrorist assets listed by Security Council of the United Nations. This has been an important issue for FATF, and Panama has taken the necessary steps to comply with international norms in this matter. The third reform is the strengthening of the financial intelligence units I already discussed. Among other improvements, we have implemented new technologies such as the digitalization, automation of the reporting and collection of data and information. This ensures full transparency and the automatic collection of all reports of suspicious activities. It enhances the financial intelligence unit as a strong, independent, and impartial entity. This system has been in place since the end of last year. The fourth reform is an example of where Panama is really going above and beyond what most nations have implemented in terms of transparency. We now require the reporting of suspicious transaction activities or reports of non-financial industries vulnerable to abuse, such as construction sector, the real estate sector, the casinos, the colon-free zone, and activities performed by professionals such as lawyers when they are representing or acting on behalf of a third party. These industries are required to report any suspicious activity they know of their customers, both voluntarily and upon request. Starting at the end of last year and going forward, Panama will be one of the few countries in the world requiring reporting from these sectors. Okay, the fifth area is the customer due diligence. We are currently in the process of implementing customer due diligence, not only for the financial sector, but also with the non-financial sector. That's also a unique step going forward compared to the global community. In fact, the due diligence is enforced now not only to lawyers, but also to other non-financial sector or real sector that are vulnerable to abuse, such as the construction, the real estate, and the one mentioned before. And finally, the last action taken was the cooperation. In the cooperation side, we enforce by legal laws that were entitled in April of last year, the judicial cooperation among the different Attorney General's office. Right now, we know, because of the papers in the media, that the Attorney General's office in Panama has received asking mutual cooperation for judicial case in several countries of the world. Besides that, there is another enhance in the legal system, which is the cooperation of the Financial Analysis Office, so in a bilateral way. As you can see from the timeline here, all of these reforms I have just discussed were enacted during the last 21 months. We were included in the FATF Gray List on June 30, 2014. And by April of 2015, we approved 7 laws with the consensus of the entire country. And those laws are the actions that I explained before. By August 2015, all regulations have been approved, including those that apply to the 16 new non-financial industry vulnerable to abuse. In the second half of 2015, initial implementation and training began with regard to due diligence and reporting requirements. Finally, this past February, Panama was removed from the FATF Gray List after only 18 months due to significant improvements made, including the high-level commitment from government officials and the private sector, the new anti-money laundering regime, and the initial step to implement this new regime, which was verified by FATF. This success story demonstrates that in Panama, when there is a common goal, differences are eliminated to accomplish objectives. This is something that makes us a special country. While much has been said about the Panama financial sector after the Panama Papers leak, I believe that what's more important and what is not being said, that the new regime we have so recently implemented has started taking the appropriate steps to promote financial transparency. However, this is only the beginning. We will continue our efforts to improve our regime while expanding our collaboration with the international community to tackle this global problem collectively. Thank you.
So now we'll hear from the Bank Superintendent, Mr. Fernandez. Thank you.
Good afternoon. Thank you, Andrew, Eric, Chip, and obviously the Wilson Center for hosting this important event. Vice Ministers Sarak and Varela de Chinchilla, distinguished guests. I would like to first address some facts about the banking sector, as well as our results of 2015. And later on, I will address our advance in terms of regulations. Panama's banking center was created in 1970 as a first step to develop an international banking center that can generate monetary conditions to support the growth of the national economy. In 1998, Law 9 was created the Banking Superintendency of Banks, known in Panama as the SBP, which I'm currently leading. Importantly, Law 9 established the SPB as an autonomous and independent institution to provide development of the banking in Panama under advanced regulatory guidelines. I take this autonomous and independence very seriously. In Panama, the approval of a banking license is a lengthy and rigorous process. We do not have numbered accounts, nor P.O. box banks in Panama. Currently, 92 banks operate in Panama, representing 20 countries. Panama offers full banking services, corporate, consumer, private, and investment banking. There are 3 types of banking licenses in Panama. First, there is a general license, which allows a bank to perform both local and international banking. Second, an international license allows a bank to perform international banking business. And third is a representation license, which allows a bank to only promote banking business in Panama and the region without carrying it out. Let's take a look at some of the banking center's key figures. 1, it is a system with a healthy capital adequacy ratio of 15.2%, twice the minimum 8% capital adequacy requirement, which shows sound capacity for generating capital to cover unforeseen risk. Second, its liquidity has a very stable funding base. Total deposits grew 7.5% in 2015. Legal liquidity has been stable over the past few years, averaging 59%. Given the current events, it is important to mention that the banking center's liquidity continues to perform strong and stable. It was 61% yesterday, same as last week, and same as before the so-called Panama Papers. 3, the system's profitability levels are sound, with an efficiency of 1.7 times revenue to operating expenses. This reflects an acceptable capability for generating capital. 4th, domestic loans to the private sector are the main asset of the system, which reflects an 11.6% increase versus 2014. Last but not least, the indicators relative to the health of the portfolio show low delinquency. Non-accrual interest loans represent 0.9% of the total domestic portfolio. Another aspect to highlight is that close to 70% of the portfolio has real collateral. Now let's look at the banking center's balance sheet. Total assets reached a record level of $118 billion as of December 2015, which represents an increase of 9.3% compared to the same period of 2014. Average balances even grew to a 10.8% versus 2014. After a titanic private effort and public and private effort that was achieved in record time, we can say with great satisfaction that we have responsibly achieved Panama's exit from the FATF gray list in February of this year, a goal that is beneficial to the financial system and the economy, and has contributed to the further strengthening of our institutional framework for the prevention and control of money laundering and the financing of terrorism. At the SBP, this has included several important changes to strengthen our regulatory and supervisory capabilities. We have increased our anti-money laundering and combating the financing of terrorism supervisory officers to 52, and we are in the process of hiring an additional 13 more. We have increased our supervisory force by 52%. We continue to rigorously train in the newly regulated sectors as well as our supervision force. We have received training from the U.S. Treasury, Department of Justice, OCC, IDB, and the government of Spain. We have also conducted inspections to 50 banks already, 18 trusts, and 13 new regulated sectors under the new regulatory framework. 5 new regulations have been issued by the bank superintendents of Panama, which are Regulation 4, which addresses the register of authorized bearer shares custodians. This regulation went into effect in 2015 and now officially requires a license duly authorized by the superintendents of banks to maintain the custody of bearer share certificates. This also means that every custodian of a bearer share knows and registers who the final owner of the share is. Regulation 5, 2015, which regulates new sectors supervised independently by the superintendents of banks for prevention matters, such as finance companies, leasing companies, factoring companies, issuers and processors of prepaid cards, debit cards, and credit cards, issuers of payment instruments and electronic money, other corporate services conducted by trust companies. Regulation 7, 2015, which clarifies the warning signs catalog for the detection of suspicious transactions for anti-money laundering and terrorist financing and the proliferation of weapons of mass destruction, related to customer and transaction changes in behavior, legal entities, employees, executives, and cash transactions. Regulation 2015, which streamlines and strengthens sanction procedures and includes sanctions for the newly regulated sectors. We have sanctioned banks with large fines for not complying with AML KYC regulations. Regulations 10, 2015, which addresses the misuse of banking and trust due diligence process, such as reinforces due diligence requirements, establishes criteria for customer classification for low, medium, and high-risk clients, enhances due diligence for public figures and high-risk customers, requires banks and trusts to create an anti-money laundering committee in addition to the compliance committee, requires regulated sectors to have an automated AML monitoring tool. We will continue to raise the bar in corporate governance for both the board of directors and general managers of banks, in line with our regulation and Basel guidelines. We will host next week an event addressing corporate governance. The keynote speaker will be a senior OCC officer. We're also developing an e-learning module on corporate governance. Going forward, both the board members and general managers of banks will be required to take this course. The first line of defense is to have a solid corporate governance. We're also developing an e-learning module on AML CFT that will require all bankers to take this course. The superintendency has a roadmap to Basel III that will further strengthen our regulations in the areas of liquidity, capital adequacy, corporate governance, market risk, prevention, and operational risk. Finally, I would like to take this opportunity to reinforce that Panama has strengthened its legal and institutional framework to prevent money laundering. Based on the recent inspections we made to banks, we feel that they have further strengthened their internal control procedures in line with the new legal framework. FATF and the world regulators have recognized the effort and record time that the public and private sector put together to comply with the FATF requirements. This is a strong testimony of our country's commitment to combat this scourge, to promote transparency, and to welcome international cooperation. And most importantly, our banking center continues to be liquid, strong, and stable. We have experienced no shocks to our banking system over the past 20 years, even during the global financial crisis of 2008. The soundness of our banks ranks 11th in the world, according to the World Economic Forum, thanks to our strong market development and the advantage of our dollarized economy and historically low inflation rates. This means our banking system is healthy and have sound balance sheets. We are decisively moving in the right direction to further promote financial transparency and to expand our collaboration with the international community to tackle this global scourge. As you can see, we have done many things to improve transparency in a short period of time, in line with international standards. We will continue to work together as a country to keep updating our legislation with the highest international standards in order to have a sound, safe, and competitive banking center. Thank you very much.
Thank you, Superintendent Fernandez. Now we'll turn, lastly but not leastly, to Chip Ponce
Thank you, Eric.
from the Center on Sanctions and Illicit Finance at the Foundation for Defense of Democracies.
Thank you, Eric. Everybody hear me okay? I don't think I need this, right?
No, you're mic'd
I'm
up.
pinned, okay, so I can roam. 3 opening comments. First, thank you to the Wilson Center, the Woodrow Wilson Center. Andrew, Eric, great to meet you. Fabulous facility. This has been around since 1999. I mentioned when I came in just a few minutes ago, it still smells new. So they're taking great care of it, and it's a pleasure to be here. Thank you for having me. Second, congratulations to the Panamanian government. Tremendous efforts to strengthen the financial transparency and the security of the international, not just Panamanian, but the international financial system through many of the efforts that you have seen explained in the PowerPoints and in the comments of the panel. So thank you for your efforts. And the third is to thank you for your interest in attending. It's not often that people will create a headline event around notions of company formation, customer due diligence, or financial transparency. I can't get through 5 minutes at the dinner table on those concepts without one of my kids throwing something at me, saying, "Dad, this is just not that interesting." So it's a set of concepts that is increasingly important to our collective security, and yet defies consistent attention at the highest levels, because it gets technical in a hurry, and there are competing headlines on more targeted or urgent issues that prevent us from taking the reforms that are truly necessary to strengthen our financial security. We have an opportunity through what has happened in Panama to elevate that discussion, starting with this panel, and continuing after today with the efforts of the Varela administration in Panama, joined by efforts of financial centers around the world. It's a collective problem, it requires collective action. So let's talk about these 2 events and then the impact of these 2 events on financial transparency and financial security. First event, the delisting of Panama from the FATF gray list. Raise your hand if you know what FATF means. That's pretty good. That's pretty good. When I started with FATF 15 years ago, there may have been 1 or 2 people in the audience who understood what FATF did. So the delisting of Panama from the FATF gray list is a huge accomplishment for those of you who understand the FATF mission. The FATF mission is, in short, to set the global standards on combating financial crime, money laundering, terrorism finance, proliferation finance, serious tax crimes. They set the standards not for Panama, they set the standards for everyone through a complicated process that really requires a whole other panel. How is it that financial centers in countries around the world implement these standards? How do we know how we're doing? Beyond creating standards, FATF assesses jurisdictional compliance with those standards through a peer review process. I've given a lot of presentations over the years on how do you solve collective action problems that really don't have anything to do with financial integrity or financial transparency, but have everything to do with the success of FATF in driving consensus and changing behavior on difficult collective action problems. And the FATF does that through this peer review process, an intensive audit of every country's AML-CFT regime. And it doesn't end there. When that audit is done, what happens? It's published. It's released. And people say, so what? FATF doesn't have Chapter 7 UN Security Council authority. It's not an international law-making body. It's a standard-setting body. Tell that to countries that are gray-listed, much less blacklisted. Tell that to financial centers and banks that are under increasing pressure to manage the risks of financial crime. The publication of these assessments creates tremendous market pressure to strengthen money laundering, terrorism financing regimes, anti-money laundering, counter-terrorist financing regimes around the world. And that's exactly what happened in the success story of Panama, and it is a success story. This is a country that was gray-listed on the back of a number of strategic deficiencies in implementing global standards. This was less than 2 years ago, June 2014. In my 11 years of FATF, 6 of them co-chairing the policy working group, I've never seen a country come off that list inside of 2 years. Panama did it just under 2 years, as of February. So this was supposed to be a congratulatory panel, and it should be, because that is a tremendous amount of work that the Panamanian government has undertaken. So let's talk about the second event that's happened. It's made this a bit more complicated or interesting, depending on your perspective. The so-called Panama Papers. And I did catch that they are the so-called Panama Papers. And I think that's right. I think that's right. It's sort of a catchy alliteration, but the fact is it's misleading. Because it's really not about Panama. It is about the challenge that we face globally in doing the hard work of implementing what seems to be a simple concept of financial transparency. The Panama Papers, you all know what's happened, right? So we've had one law firm, Panamanian based, with offices all over the world, creating anonymous companies that bad guys like to use to conduct bad guy activity. Did anybody see 60 Minutes in February? An episode called Anonymous Inc.? Yeah. So do we think this is a Panama problem? 14 out of 15 law firms in New York City agreeing to do the same thing on camera, hidden camera. Have you read the release of the Panama Papers, what is actually included factually? I loved your remarks, Ivan, because you said what I was going to say, which is that you had financial centers around the world implicated in this, right? These are law firm offices in the G20 countries. These are companies that are created in G7 countries. These are customers that are serviced in financial centers around the world. So it's truly a global problem. That was the second event that happened that has made this panel a bit more interesting than a pure celebration. What do we do about it? What does it mean moving forward for the financial security, financial transparency mission? 4 thoughts. First, what is financial transparency and why is it important? May seem simple, but let's explore that. Conceptually, financial transparency is understanding who's in the financial system, where their money comes from, and where it's going. Seems pretty straightforward, right? Until you try to implement it, right? Not in 1917 or 1916, but in 2016. In a globalized economy where sophisticated governance structures are more the norm than the exception, when international travel is more the norm than the exception, when not the Fortune 100 companies, but small and medium enterprises that are the bedrock of the middle class and of the global economy, increasingly have supply chains or relationships or customers that are cross-border, and where international banking is increasingly the norm rather than the exception. In that global economy, financial transparency is elusive. It's hard. And there are 2 pathways to financial transparency that global authorities, meaning financial centers through the FATF, have set out now for well over 10 years. One pathway is to say, when countries create legal entities, when you use your authority as a country to allow, enable, authorize, and yes, profit from incorporation services, trust authority, contractual recognition of trust, legal arrangements, companies, foundations, LLCs, PICs, IBCs, whatever you want to call them, legal entities. When you create these things as a country, since one part of your government is working like crazy to keep us safe from bad guys who like to traffic in weapons and blow things up, then let's not have another part of our government authorize the creation of vehicles without understanding who these people are behind these vehicles. So one element of the global standards is to say that countries have to understand the beneficial ownership interest behind the companies that they create. Turns out we're not very good at that. Push pause on it. The second pathway is that when anyone seeks entry to the financial system, we collectively expect our financial institutions, the gatekeepers to the financial system, to identify who those people are. So when you open a bank account, you walk in, you got a passport, you got a driver's license, you got to show it, right? You're identified, you're verified. So if Osama bin Laden wanted to get a bank account on September 12th, wouldn't have been able to get one. But if he becomes ABC Company, might be able to get one. If he's ABC Company in a jurisdiction that doesn't require the identification of whose interests are serviced by ABC Company, it becomes a little easier. When ABC Company is owned by XYZ Trust through LMNOP PIC, Private Investment Corporation, in 3 different countries that don't talk to each other because of political differences, it becomes a lot easier. So this is the reality of the problem that we face. And while this seems fairly accessible, hopefully, this loses public attention way too quickly. So after the 60 Minutes episode in February, there was a shock that we, Americans in this case, allow this to happen. I've been in congressional hearing after congressional hearing where there is shock about the continued abuse by terrorist organizations, drug trafficking organizations, proliferators, rogue regimes, human trafficking organizations, the abuse by those organizations of anonymous legal entities. Shock. Going on now for 15 years. Shock. I'm shocked that we're shocked. Right? It's like this is a validation of everything that we've learned over decades. This is how bad guys launder money. This is not a surprise. The real question is, are we going to be shocked long enough this time to do something about it? The progress that Panama has achieved in getting off the gray list is tremendous. As they've stated, there's more work to be done, not just in Panama, but everywhere. That work that lies ahead should focus on financial transparency by strengthening company formation processes in financial centers around the world so that we understand the interests of those behind the companies that we create. We need to do that. And secondly, we need to take customer due diligence requirements for financial institutions, which Panama has clearly strengthened over the past year and a half, and we need to enforce them. Anybody who's read the big bank headlines understands that the U.S. has made quite a bit of headline-grabbing attention by fining to the tune of billions of dollars the world's largest, most well-regulated banks from the world's most well-regulated financial centers. Many of those actions result from a failure to implement customer due diligence, not because those laws don't exist, but because they're not enforced effectively. They're not implemented effectively. So this financial transparency mission has a company formation reform element to it in which we have a lot of work to do, and it has a customer due diligence element to it in which we have to enforce what it is that we have on the books. So that's the challenge ahead. I am confident that Panama is going to be continue to lead in this effort, not just in the region, but globally. And I think this is the kind of event that, as much as the pure celebration has become a bit more mixed in the wake of the so-called Panama Papers, it's a huge opportunity for Panama to continue to lead in this space. So I'm looking forward to watching this, to assisting to whatever extent that we can from the United States. And thank you for your time.
Thanks, Chip. All right, we have about 25 minutes for questions. I think what I'm going to do is take 3 at a time. So if you'll be patient, and please, let's keep these questions a little bit short so that our folks have time to answer. We have one right here. There's a mic. If you'll wait and identify yourself, please, for the people watching online.
Hi, my name is David Smith of the Guardian newspaper. It's been reported that Mossack Fonseca has been an advisor to the government of Panama, and that Mr. Fonseca is a citizen of Panama and a friend of the president. Can you confirm that's accurate, and is that worrying that there is a close relationship there?
Okay. Second question. Go ahead, right there.
Robert Schroeder with International Investor. Registration list. Is Panama moving to the point, is the United States moving to the point where we will insist on a open, transparent registration list of all companies and the beneficial ownership thereof?
Okay, there's a question right back here.
Porter McConnell from the Financial Transparency Coalition.
Could you stand up a little bit? It's
sure.
a little bit hard to hear and see. Porter?
Just a quick question for all of you, and thank you for coming so far. As you very well know, the International Anti-Corruption Conference is scheduled to be held in Panama in December. I understand they're discussing whether they should still come. I'm wondering if you could make an announcement on, say, fully public registers of beneficial ownership and compel them to come and celebrate your success. I think that would probably make a very convincing case. I'm wondering about your thoughts on that. Thanks.
Okay, that's three.
I'll proceed. The question from the reporter from the Guardian as to the closeness of Mr. Ramon Fonseca to the administration. Well, we cannot deny Mr. Ramon Fonseca was an advisor to President Varela in a post as an advisor, or minister advisor. He has resigned from that post. He resigned a couple of months ago to focus on his defense. Now, Panama is respectful of the rule of law and the separation of powers. It will be up to the Attorney General's office to make the appropriate investigations and come out with a definite a proposal or now, besides that, the company is right now being overviewed by 4 different regulatory agencies, including the Superintendency of Banks, the Intendency of Non-Financial Entities, and the Superintendency of the Securities Market. Mr. Ramon Fonseca's role within the government was as an advisor. He will be treated as any Panamanian by the Attorney General. This is a very high-profile case. And I would just ask for any person, to wait until the final investigations are made. As we said, we're respectful of the separation of powers and the rule of law, and the Attorney General will have to conduct its proper investigations. As for the question regarding the registry of beneficiaries, of ultimate beneficiaries of shares in companies, we understand that this is a very preliminary proposal that has been put forth, if I'm not mistaken, by the United Kingdom, if I'm not mistaken. Now, we're going to start, this is a process. Maybe we'll end there. Maybe that will be the final result. But meanwhile, we have to implement immediate measures to comply with the requirements of the international community as a good global citizen. And that is not the first step. Maybe this will be implemented at some point in the future. I agree that if we do this, this has to be a coordinated effort. I mean, Panama is one international financial center. There are more than 10, right? So, and by the way, I should mention this. From all the allegations being put forth, none of the assets mentioned are deposited in the Panamanian system. We're talking about 210,000 companies. Maybe there are some companies that have assets in the Panamanian banking system, but so far, all of the operations, all of the financial operations were performed in Europe. So, if we want to talk about the regulations and if there's blame to go around, I will say there's plenty of blame to go around. Not in Panama, not just in Panama. Do we have vulnerabilities? Yes, we do. We just said so. We said as much. And we'll tackle those vulnerabilities. But to pinpoint this problem on Panama is completely unfair. So regarding the risk of ultimate beneficiaries, if it is a proposal that is going to be adopted coordinately by the OECD and is going to be proposed, we'll be there. As we are right now with the OECD Common Reporting Standard, which we will adopt. But as I mentioned before, this is not Panama. It's not just Panama. So you know, we're become like, because of the Panama Papers, this unfortunate name, we've become like the poster child for this. And 75% of those companies were not incorporated in Panama. So I can give you that list tomorrow if you want. It's not even going to dent the problem. We have to work this globally and in a very coordinated manner so that we can tackle this problem. And Panama is very willing and able to put forth solutions and proposals on this matter.
Yeah, if I could just add to that, I love the fact that we're now launching into a more technical discussion. I live in nerd camp, and this is where I get comfortable. So I completely agree with Ivan's remarks, but I also want to just add first that we've got to be very clear-eyed about what it is that we're proposing as the solution. What beneficial ownership is, as a definition, is not always well understood. The relevance of a public registry of information that is not particularly credible is minimal. So if you decide that you're going to publish information about who owns ABC company, and you publish that information, but it's not verified, it's not current, it's not any good. I've had this debate for 15 years in the context of US reform. Delaware and Nevada are often cited as serial incorporators, which they are. Is the answer to force Delaware and Nevada to put their registry online? Does that solve the problem? It does not. It does not. Law enforcement can go to the corporate registry and get the register anytime they want. That doesn't solve the problem. The problem is whether the information that you're going to get is accurate and current. That's the problem. And unfortunately, that's a lot harder. It sounds good to say, publish your registry, because it's something that people can understand immediately. It's a lot harder to make sure the information in that registry is current. This is what banks have to do. It's one thing to have a bank say, yeah, I've identified my customer. But have they verified that identity? Do they understand the beneficial ownership behind that? These are difficult concepts. Banks are spending billions of dollars. The Wolfsburg Bank aggregate or individual number estimate now is $1 billion a year on financial crime compliance. That's how expensive this is. Is the state of Panama, is the state of Nevada or Delaware prepared to start paying that sort of money in order to understand the interest behind those that are incorporating? Because if they're not, then who is? This is a serious question that we need to answer, right? This is why this hasn't been done. And this is why going to Panama and saying, Panama, fix it, isn't the answer. This is why, despite the fact that you've had, at the level of presidents, prime ministers, finance ministers, statement after statement, communique after communique, coming out of the G7, the G8, the G20, even just this past month. Watch what happens out of these bank fund meetings. Another statement on the importance of company formation reform. None of those countries has done this yet. Because as it turns out, publishing information is one thing. Making sure it's accurate, it's meaningful, it's current, is quite another. And so there's a real challenge behind doing this the right way. And if you're going to do it the right way, it will be commercially punitive unless everybody does it. It's a collective action problem. So,
Yeah.
I wonder if I could, please, go ahead.
We do publish online who are the directors of the companies, not the ultimate beneficiaries. So we're halfway there, and I completely agree with Mr. Ponce. This is not necessarily the cure for all. So yeah,
Vice Minister Chinchilla wanted to.
Yes, regarding the open registration list, I agree. I think the steps that every country has to start taking is the due diligence that we in Panama have been implementing for the non-financial sectors. If this is really implemented in all the countries, specifically the 21 jurisdictions that are more enhancing these companies, creation of these kind of companies, offshore companies, it will enhance the system. And the second thing, the cooperation is vital. The cooperation not only of the judicial systems and the judicial pairs among companies, among countries, but also of the income authorities and of the intelligence authorities. So basically, I think what Panama has made in this new regime, that the enhancement of cooperation has been established, is a key factor for improving, the information of different crime that can be committed in the entire world, by bilateral cooperation agreements.
At the risk of oversimplifying this and offending our nerdy panelists,
Nerd camp, yeah.
I guess the one question I have is this. I'm struggling with understanding whether the problem is one of setting standards and those standards are inadequate. I know that Panama's made a great deal of effort to get up to the standards, the international standards. Or is the problem one of just cumplimiento, compliance? And you seem to suggest that we have standards in Nevada, Delaware, but people aren't really complying. And, I'm just, it feels a little bit like we're chasing our tails here. Are we trying to set standards? Or are we trying to get people to implement? Or maybe it's a combination of both. I don't know, but.
It is a combination of both, and it's a great point. Again, to sort of get one level deeper into the analysis, Panama's delisting was based on standards that were set in 2003. In 2003, the standards that were set were ambitious. By 2010, it was clear that those standards were already outdated because they did not focus with the level of attention, clarity, and priority on the issues that we're talking about now. So in 2012, those standards were revised. Not only were the standards revised, but the methodology for assessing compliance with those standards was revised to focus not just on legal regulatory frameworks, about which Panama's clearly done a lot of work, and in which many countries have made significant progress, but instead to focus on the effective application of those frameworks to achieve results that are meaningful. So we've shifted from a 2003 standard in the context of the delisting of Panama to 2012 standards that are focusing more on these financial transparency issues. And we shifted from do you have the laws and authorities in place to are you applying those in an operational way that delivers results. Those are two big changes, but they also represent the current standard. The current standard, I would argue, is adequate, but it's also relatively new. So seeing countries now have to lift their game from technical compliance with 2003 standards to effective implementation of 2012 standards is a difficult chore, and this is probably the hardest element of those standards to meet. So you have standards that have changed, in which I would argue we've got adequate standards, and you have catch-up by jurisdictions trying to implement this. The cause of concern is that with respect to these issues of customer due diligence and company formation, there has not been the same sort of progressive track that we've seen in some other areas. And in part, it is because of the particularly challenging technical nature of this, of beneficial ownership. To Ivan's point, you can have registries of nominal ownership. It doesn't really help you. The scenario I was drawing up there, ABC owned by XYZ, owned by LMNOP, trust company, PIC, LLC, however we want to call it, those companies will all be in different jurisdictions. So if you're an investigator, if you're law enforcement and you're investigating ABC company, you go to the register and it says, oh, ABC is owned by XYZ company from a different country. By the time you get that answer, which is going to be yet another shell company, you're months into an investigation. The bad guys have done what they've done and they're gone. And this is how international money laundering works, right? So we have to be in a position where what it is that's available is not only current with respect to nominal ownership, but that it's current with respect to beneficial ownership. And that's why it's hard, that's why it's expensive, and that's why this has been a particularly challenging standard to meet.
Did you have anything you wanted to add?
Well, what I said before, I think it's important to understand the tremendous effort that Panama as a country put together to make this happen. We're a small country with limited resources. And let me tell you, we put from different areas senior people on a full-time basis to reach, and be able to successfully get out of the gray list. And we will continue. We still have a second step, which is very important, is that we have to show effectiveness. And this will take place on May of next year. And we continue to have the same committee, and we meet on a weekly basis. We have a clear path, an action plan for it to be successful, and we're sure it's going to be. As a matter of fact, we have a person who's leading this with a great deal of experience from FATF, who supported us a great deal in our past effort. But it is important to say that in a very short span of time, the commitment of the country, and it's not just coming up with new laws and legislations, is walking the talk. And as I said before, we are serious about it. And those who do not, follow the path will be fined, and they may lose their licenses. I can tell you that I took this position about a year ago, and it was incredible. The shift for me was, I was a commercial banker. And to be a regulator overnight is something that's very dramatic. But the things that, that come up to, as things developed, I had to confront a situation, and there was a bank that was not lined up correctly, and they were not doing things properly. And I closed the bank. It's not easy, believe me. It creates a lot of media, a lot of stress, a lot of pressure. But we did it, and it's an example. And what I just want to reinforce, that we are, this is a very important step for Panama in a very short period of time, and that we are already implementing this framework, which is important. It's not just to have the laws, it's to implement them. We're walking the talk.
Great, thank you. I think we have time for one more round. There's a question here in the middle, and there's one over here. I don't know if folks on this side have any questions, but yes, please.
Okay. Hi, Azam Ahmed from the New York Times. You've mentioned FATF a lot, but the OECD had pretty stern words for Panama after the release of the Panama Papers, and I'm wondering if you could respond to their regulatory problems, or concerns, rather.
Okay, there was a question on this side.
I'm Dipali Srivastava with a consulting firm, Kite Global Advisors. The panel has very persuasively made a case for why Panama should not be singled out for a global problem. Are there financial centers, though, that should be singled out? So Hong Kong, for example, had the busiest office, and a lot of the many prominent Chinese politicians and celebrities have their names have emerged in shell companies being funded through Hong Kong. So and Singapore too figures prominently in these investigations. So what is the sort of level of cooperation of Asian financial centers with OECD and the US and Panama in this, and how optimistic or not is this panel about those countries cooperating in a global effort?
Is there one more question? Okay, if not, we'll.
There are.
Oh, I'm sorry, we're getting blasted by a light.
Okay.
Sorry, go ahead.
Thank you very much.
Can't see in the back.
We're Laura Newton from Caracol Television from Colombia. Our question is, why doesn't Panama agree to sign an accord to exchange information with the Colombian government, maybe as they have with the United States? And also, would Panama be willing to sign an agreement to fully collaborate with Colombia without a previous judge's order, a judicial requirement from the Colombian authorities? Thanks.
Thank you. Okay.
There's one last one we can take.
Should we take one last one if it's short, brief?
Yeah.
All right.
We'll clear the table.
Go for it.
Thanks. This is Pooja from Financial Transparency Coalition. I think, obviously we agree that this is a global problem, and we're talking about, financial centers around the world. I'm wondering if we have the right institutions then to tackle this globally. We talk about the EU, which have their own, political, issues with having to blacklist their own jurisdictions. OECD has its own limitations. Isn't this the sort of thing that we should see a conversation in the UN, where you have all countries of the world, it's a neutral platform, and everyone gets a say? So why don't we see that? Thank you.
Great. Okay. Do we
great.
want to just start down this way?
And I'll answer the fourth question first, and totally agree. We completely agree, and that is one of the points that got us into this mess with the OECD. Let's be clear about it. That it was that we proposed that this should be handled by the UN, where everybody has a say and everybody can participate. And that didn't work, did it? Now we're getting communiques from the OECD saying that we're non-collaborative. But it's not that we're not being collaborative just because. It's because we believe in principle that this should be managed by a more collegiate body that includes everybody and not just a rich country club, just to make that point clear. And regarding the OECD statement about non-collaboration, that I think I partially went through that. And let's be totally clear. If you're from the OECD, you think that we're a bit behind the curve, because most countries have agreed to adopt the CRS standard, the Common Reporting Standard as stipulated by the OECD. We haven't. We just stated today and we stated before that we're willing to adopt the Common Reporting Standards as set forth by the OECD. That is a process that we have to go through with the OECD. But we also propose that this should be handled by a more collegiate and more inclusive body, and not just a rich country club. Obviously, that message, I guess, generated a reaction. But, you know.
He said diplomatically.
I try. But we're going to comply with the Common Reporting Standards. We're going to adopt the Common Reporting Standards so as not to fall into that another gray list or what have you. Regarding financial centers that have to be singled out, that was another question. I won't mention anything regarding any other country. That wouldn't be fair, not from a government's perspective. The question from Caracol, Colombia, regarding why doesn't Panama have an automatic exchange of information with Colombia? What we've transmitted to the government of Colombia time and again is that we have to look at the relationship more holistically. Right now, we have a ruling from the World Trade Organization that Colombia doesn't want to abide by. Right now, we are fighting a drug war on our border with Colombia, because the military is pushing that war into our borders. So it's not that we're afraid to share the information. We just want to look at this holistically. We have several points on the agenda with the Colombian government, and the automatic exchange of information is just one of them. And we would like to cover the other two issues as well. There are very important issues for the Panamanian people, specifically the war on drugs that is basically spilling over our border, and the ruling by the WTO, I'm sorry, that stated that the non-tariff barriers stipulated by Colombia were illegal. So we want to look at this holistically and cover all the points, and when we can do that. I mean, that's what we've been saying time and time again. It's not anything new, but we haven't gotten to the point where we can sit down and say, we'll cover the 3 points and let's go forward. Let's move forward on an agreement. And by the way, we did propose to the Colombian government as a gesture of goodwill to do a bilateral double taxation agreement, whereby if Colombia asks for the information of Jorge Perez, we will provide it. What we said is that we can do as a gesture of goodwill. What we cannot do is the automatic exchange of information, which is just sending all the information from all Colombians that have assets in Panama immediately to Colombia. I know that that's what they want, what the government wants. But we also want the ruling from the WTO to be respected. And we also want to set forth a solution with the problem, the drug war that we have on our border with Colombia. And with that, I've covered the 4 questions.
Great.
I don't know if...
Well, I want to give Vice Minister Chichilla an opportunity, Superintendent.
Yes, regarding the OECD issues, Panama has made also important improvement. We have 30 different bilateral agreements with countries. As Vice Minister Sarak mentioned, with Colombia, we are willing to make the bilateral agreement as a goodwill, in step. We also have manifest publicly, the President Varela manifested the commitment to automatic exchange of information in the UN forum last September. And in fact, Panama is better ranked in transparency ranking, tax justice network than countries such as US, such as Japan, such as Germany. So I think this is a global problem. This is a problem of many jurisdictions. The Panama Papers has demonstrated there are 14,000 different law firms and banks that are involved in more than 100 countries. So this is a global problem that should be addressed as a global, globally. Panama has making big progress, and we have walking the talk with the things that we have made, not only by implementing or passing laws, but also in these Panama Papers, or the so-called Panama Papers, has demonstrated that we have walking the talk, because there are, all the institutions and the authorities have already started inspections, not only the Attorney General's office that announced the raid, but also the new institution that supervise that, for example, that the lawyers made the due diligence is already doing an inspections, and that was approved by the board of directors the day after the announcement, or the day after the scandal. So since last week, an inspection is taking place. So Panama is not just approving laws, and it's not and not only to 2003 standards. We go beyond the 2003 FATF standard. In fact, we are example of many new regulations that are currently under implementation that not other countries in the world has. And regarding the other countries such as Hong Kong and Singapore, in the Panama Papers, there are more than like 21 jurisdictions, and what President Varela has said about the Blue Ribbon Committee that is going to work in order to produce some advices on the way to continue improving and continue progressing in this fight against terrorist financing and money laundering. It's a big step. I think it will be very important for other countries, and specifically jurisdiction that appears also as an important players, to join these efforts and to also enhance their jurisdictions and the implementation, because the key of this, the success is globally working together, cooperating together, and not just aside one country.
Thank you. Superintendent Fernandez?
Yes.
Any
Well,
last
yes.
comments?
Well, I'm coming back to the superintendents, which is my expertise, and I'd like to just reinforce again that we are totally committed to transparency, and that we will do whatever it takes for it to happen. I would also, I think it was addressed a little while ago, but we are, effectively touching what we call the third rail in Panama, and we're not afraid to do so, as we did in the case of addressing FATF and other matters. So I can say that from top to bottom, there's a very strong commitment for Panama to move in the right direction, and I really strongly want to pass that message to you. Thank you.
Thank you. Chip, any parting words of wisdom?
Two quick comments. Thank you, Eric. The first, about who should be singled out. It's a natural question, and it requires a step back to recognize, appreciate that for any country that's going through an examination of its effectiveness in combating financial crime, this is a fundamental issue. But there are other fundamental issues, right? We have countries that haven't brought cases prosecuting money laundering. We have countries that have not forfeited assets. We have countries that do not have the authority to freeze terrorist-related assets outside of Al-Qaeda or ISIS. So we have other fundamental issues that countries have to work on. So to single countries out is difficult because it's really about which issue rather than who's not a player. Everybody is a player, but everyone has things they have to work on. So when countries are called to the mat, it has to be with attention to detail on what element of this anti-money laundering CFT regime is lacking. Second, that with respect to whether we've got the international architecture to manage this mission, which is a great question. A lot of time spent on this, and by a lot of folks. The UN is without a doubt a part of this. They're an observer to the Financial Action Task Force. And they should be. It lends legitimacy to it, it lends inclusiveness to it. But at the same time, they're not the driver of it. And the reason why is because, as you can tell just from this conversation, which is literally just scratching the surface of a more detailed discussion of the challenges of implementation, it is very much a technical expertise-driven conversation set of challenges. The FATF was built as a technical body. And it's political in the sense that every international organization or task force has a political dimension to it. But it is particularly noteworthy as a technical body. When you think of the OECD, it is also a technical body, but it has a very different membership. The FATF membership is explicitly addressing the North-South issue, the emerging market, post-industrial country issue. There are 36 jurisdictions in FATF, North, South, East, West, emerging market, post-industrialized. There are 8 FATF-style regional bodies that collectively represent over 180 countries that attend FATF meetings. And yet, and this is incredible, yet FATF decisions, including these standards that are very tough, are taken not by vote, they're taken by consensus. So it's a pretty amazing organization. I think that governance structure is the right one. I think what's missing is the visibility on this kind of a conversation that puts pressure on the members to implement what their technocrats have already said. This is what needs to be done. We've got the playbook. We need to get the attention of parliaments and congresses and others to adopt the laws, the regulations, and then implement them through investment with resources to get the job done.
All right, thank you very much. Let me just say a couple words of thank you to our audiovisual team here at the Wilson Center. This has been webcast and recorded, so we'll post the video in the next few hours if you want to refer to it again. Thanks to my colleagues Veronica Colon and Karina Peña in particular. I want to thank the Ambassador of Panama for your excellent work and that of your team, who've really helped a lot in the preparation and organization of this meeting. And then please join me in thanking our speakers today. We're very grateful for you taking the time.
Thank you.
Thank you all.
Thank you.